squeeze in here. Hello. What was that? I hope you're ready to get your finances on point. Let's do it again. Que lo que, mi gente? Okay. Bring it back a little bit. All right, I'm just going a little too Dominican for y'all right now. It's good to be back. All right, let's get into the 4 game-changing strategies that are going to transform your finances and lifestyle. Starting off with my baby, the high 5 banking method, a purposeful way to manage and organize your finances through the use of multiple bank accounts, specifically 5. This method has been featured on Forbes, CNBC, CNET, and some of my favorite personal finance podcasts. What a lot of people don't realize is I actually have a background in financial planning, and I designed the high 5 banking method with a lot of foundational pieces in financial planning, like budgeting, goal setting, protection planning, and debt management strategies. It's all in there. There's a lot of people out there that are going to tell you to open up 5 bank accounts, 10 bank accounts, but they don't really know why. I do. I know the purpose of every single bank account within the high 5 banking method. I'm sharing this method not because it just sounds good in theory, but because I do it. And if you'd use this method too, please drop a comment down below and share your testimonial to let everybody know that this method works. And the funny part is if you actually sat down and talked to a few people that you know who are financially successful, you'll figure out that they're not just using one checking account and one savings account. Oh, no. They have multiple bank accounts. Ask them. But if you are sick and tired of dealing with the same money problems like overspending, double dipping, no savings, or no clear goals, then you're going to have to commit to cleaning up your finances and getting organized. If you're having a problem with that, that's okay. That's why I'm here. I'm going to show you how to do just that with the high 5 banking method. Now, if you're wondering what is the high 5 banking method, to keep it short and sweet, it's a purposeful way to manage and organize your finances through the use of 5 bank accounts. Specifically, 2 checking accounts and 3 savings accounts. When it comes to the first checking account, it's going to be for your bills. The second checking account is going to be for your lifestyle expenses. Now, when it comes to the 3 savings accounts, the first one's going to be for your emergency fund, the second one's going to be for your short-term goals, and the last one is going to be for your long-term goals. Depending on where you're at in your journey, the number of accounts that you use is going to vary. But my rule of thumb is to focus on the first 3 accounts: your bills, your lifestyle, and your emergency fund. Once you have those mastered, then you can focus on the other accounts as you see fit. I'm going to be honest, it's kind of like learning how to dance bachata. You have to master the first 3 steps. 1, 2, 3, 1, 2, 3. Once you've mastered those 3 steps, then you can start adding the tigueraje, the huepa, and all of that. But you can't do it beforehand, because you're gonna get roasted. And it's the same thing when it comes to the high 5 banking method. I'm not telling you to go manage your money like the rich, because you're gonna get burned. You have to learn to be a beginner and master the first 3 accounts, and then start adding the other accounts as you see fit. Okay, now that you know what the high 5 banking method is and what to prioritize, let's go into how to effectively use each of these accounts. Starting off with the most important account of them all. I'm talking about the bills checking account. This account was designed to hold all of the funds for your essentials, regardless if it comes in a white envelope in the mail or not. I'm talking about housing costs, utilities, transportation, minimum debt payments, and groceries. That's right, I said groceries. Why groceries, you may ask? Because regardless of all the jokes, having food at home is the most cost-effective way of feeding ourselves. And in my book, this is you taking care of you. You investing in your livelihood. And this is what this account is all about. Personally, I think as a society, we have to change our mindset when it comes to our bills. Often we think of our bills as something that's holding us back from enjoying life, like traveling or hitting our goals. We even pay them late as a form of revenge or something. This mindset is flawed. Being able to take care of all of your necessities is a blessing that not everyone can do. Because if they could, there wouldn't be any homelessness, there wouldn't be no government aid, food stamps, public transportation, or debt. But you and I both know that is not the case. All right, I know I went on a little tangent there, but please make sure that you are prioritizing your bills checking account with grace. Now, a pro tip that I could share with you here is to see if you can get your paycheck direct deposited into this account so you can cover your bills effectively and avoid any bank fees if you're with a big bank. How much money should be in your bills checking account? Well, that's going to depend on how much your total bills actually cost for that month. I know a lot of people like to do fixed percentages like the 50-30-20 rule, where they recommend that 50% of your income go towards your bills. To me, that sounds very aspirational. It's a great goal you want to get to eventually, but for a lot of people right now, I don't think it's very realistic. Instead, just focus on calculating how much your bills cost for that month and making sure that money is in your bills checking account. The second checking account is going to be designated for your lifestyle expenses. I'm talking about eating out, entertainment, play money, hobbies, and kids, because hey, they cost money. At the end of the day, you have to be real with yourself. We all have a lifestyle. It might not be lavish shopping sprees. It might just be a $5 sandwich. It's okay. It's okay to spend money outside of your bare bone essentials. There's nothing wrong with that. What's important here is that you understand the purpose of this account. It's here to help you build some healthy financial boundaries and to prevent any overspending. It's all about control, not restriction, okay? How much money should you have in your lifestyle checking account? That is definitely going to depend on your income, your lifestyle, and your other financial goals. Now, if your lifestyle is $20 or $800, it truly doesn't matter. As long as you can maintain it and it's sustainable for you, then go ahead and do it. The most important thing you want to be aware of is that your lifestyle isn't hindering the other areas of your finances that you still care about. Before we move on, I'm going to share with you a harsh truth. A lot of people think that the hardest part about the hi-fi banking method is opening up multiple bank accounts. Psh, you wish. The most difficult part is actually separating your bills from your lifestyle because it exposes your real spending habits that we try so hard to hide within our credit card statements. If you don't believe me, check out your credit card statement. Now that we've gone over the checking accounts, let's jump into the savings account, starting with the emergency fund. If you know me, you know I am the queen of emergency funds. This is the one place where you're going to save all of the money for any unexpected expenses. I'm not talking about no emergency shopping sprees or emergency vacations to the DR just booked off vibes. No, I'm talking about the real deal here. I'm talking about if you get laid off, a sudden death in the family happens, or a natural disaster. These things happen. We have to protect ourselves as much as we possibly can. When it comes to where to save your emergency fund, I want you to seriously take your time and look into getting a high-yield savings account so you can get better interest on your savings instead of pennies that you're getting from these big banks. There are a ton of reputable banks and credit unions that offer high-yield savings accounts. You just gotta do a little bit of research and you are gonna be surprised with how many options you have. If you're someone who struggles to save money, I want to recommend to keep your emergency fund away from your everyday accounts. The less that you see that money, the less tempted you're going to be to actually pull it because that account is going to be growing and it's going to get tempted. So cut that temptation out right away. It's always a hot topic of how much you should save for your emergency fund. I personally recommend to save at least 1 month of your mandatory bills when you're starting off and then build upon that based on your situation and risk tolerance. If you want more guidance, check out my guide right here. Let's break it down starting off with your status. If you're single with no dependents, then you can consider leaning towards the 3-month emergency fund. But if you have dependents like kids, then you're going to want to lean towards the 6 months. If you're married with a 2-household income and no dependents, then you can consider leaning towards the 3-month emergency fund. But if you do have dependents, then you're going to want to lean towards the 6-month emergency fund. If you're married with a 1 household income and no dependents, then you can consider leaning towards a 6-month emergency fund. But if you have dependents, then you're going to want to lean towards a 9-month emergency fund. If you're a business owner with no dependents, then you can consider leaning towards a 9-month emergency fund. But if you have dependents, then you can lean towards a 12-month emergency fund. Now, let's get into short-term goals. This is going to be the savings account where you're going to save for any upcoming expenses that you want to do or that you have to do within the next 12 months. This can be like a vacation or holiday, or it could be some boring stuff like some annual memberships or car registration. They come around the same time every year. Don't you love it? Probably not. I want you to treat this account as your sinking fund, where you're going to save for what you want in bite-sized pieces over time instead of overnight. This is exactly what we need to do when it comes to our finances. We need to calm down, figure out what we want to do, create a plan, and save for it in our short-term goals account. Because if you're someone who wants to stop borrowing money for every little thing, then you're going to benefit from looking at this account as your I'm not going back into debt account. You got to get a little attitude here, because this is literally a debt management system that's going to benefit you and your pockets. If you're wondering how much of your paycheck should be going towards your short-term goals account, again, I do not do percentages. It is definitely going to be based on your goals and your timeline. Now, when it comes to funding your short-term goals account, if you have a large amount of discretionary income, then you can be funding this account real quickly. But if you don't, you want to become a little bit more strategic and start utilizing refund checks, bonuses, or really looking at side hustles to be able to fund those accounts without it messing up your flow. Last but not least, your long-term goals. This is going to be your more ambitious savings account where you're going to save for expenses that are going to take more than a year to accomplish, but less than 5 years. This will be anything from saving up for a down payment on a home, a wedding, a car, or even a baby. These expenses are pricey, and it's okay. It just takes a little bit more time. A small tip that I want to share when it comes to long-term goals is to not get tempted in investing this money. I actually recommend to do a similar approach like we did with the emergency fund, where you house it in a high-yield savings account so that your funds are growing interest, they're safe, and they're ready to rock and roll the moment you're ready to pull those triggers. Now, if you are ready, then you got some homework to do. Let's say, for example, you're trying to save for a down payment on your house. You need to do your research and figure out how much you need for closing costs, inspections, and all of those different little hidden costs that comes with buying a house. Do your homework and then start adjusting and figuring out how much you can save every year until you reach that goal. The last thing you want to do is become too aggressive and burn yourself out. So give yourself some time, all right? That's the whole point of this account. As a quick recap, the Hi-Fi banking method is composed of 5 bank accounts, 2 checking, and 3 savings accounts. The first checking account will be for your bills. The next is going to be for your lifestyle expenses. When it comes to the savings accounts, the first one's for your emergency fund, the next one's for your short-term goals, and the last is for your long-term goals. This, my friends, is the Hi-Fi banking method in a nutshell. When you're first starting out, I want to promote you to actually list out your income and your bills so you can start gauging how much discretionary income you have to start organizing your finances within this method. All right, mi gente, if you have any questions, please leave a comment down below for our upcoming Q&A session. And please, 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 please do not forget to subscribe, follow me on social media, and share this information with all of your friends and family. Bye.